Hi, good afternoon. Welcome to your daily outlook for gold. Beautiful rally, the one we got today. The rejection from the 1920, it's okay. It's a good key levels, a strong area of contention in the past. Was heavy area of support in this area here. So you're expecting that at some point, that price point, especially late in the session, you're not going to have that easy juice for that continuation of the 1920. So that's why we're getting that kind of reaction here. But other than that, having a closing above the 1920 only means that continuation should be there at least to the 1928 at this point. Here's the thing. What is the stuff that you can expect for the rest of the session here, for the rest of the week? There's plenty of things that can happen, like a plain and simple range after that easy and heavy rally we got today. We may see plain and simple range for the rest of the session for a brand new daily candle. What is the things that need to happen here? When you pull up the 4-hour candles here, you can see clearly where is the zone that we're trading in. Very specific zone that can provide heavy areas of heavy moves, and at the same time kind of a clean moves. So you can see here that rejection, yes, it's happening really heavy. The 4-hour candle there didn't manage to close above that key level. From the left-hand side, the areas of contention for any continuation to the upside, what makes sense at this point is to have a friendly pullback, technically no more than this area here. This little zone a little bit off from that 1913, let's say, but this one right here, and in this area as well. So you know that at this point, price can easily give you a pullback toward that 1913. For the sake of simplicity, if you want to continue looking for buys at this point, what is the things that needs to happen? Price, plain and simple, creating a fake out from the 1915, maybe a drop to the 1913.50, 1914, back in the range, right? Your job is not to trade in the range. Your job is to wait for the fake out, for the daily high being established and the retest of that daily high and a possible third hit to the same level. Let's say that price opened with a little bit of a move to the downside there, but at the same time still respecting that area. Your job is not how to trade from that 15 to the 13 or something like that. No, your job will be wait for the fake out, wait for the pullback, wait for price to pull back in the range, and the retest of that high over there may be the option. But as you can see, from to the upside there, after that reaction from the 1915, you still have like 50 pips to the upside to the 30, to the 20. If for any reason price retest that area 2 or 3 times and you have enough volume at that point, then you know that your job is how to target the very next key level, the main key level here, 1930. In the half of this range, we have a little bit of an issue in this area here, the 1925. But if the volume is right, you should have, zero business breaking that area, especially because the daily from today is closing strong. It's not, it's not joke. The one that I was expecting this morning to give me more and an easy job was this candle here at the with the news basically 8:30 and whatever, having a pretty decent close above this 1907. Same thing that I said on the daily outlook from yesterday. Basically, anything that can close the 4-hour candle that can close above the 1906, 1907, a body of the candle that can close up, but it can give you plenty of continuation to the upside. But reaction happened for a reason. Price apparently left some sort of liquidity still sitting down there, and that's why we pulled back to those areas, and the reaction happened. Support was established, and a heavy entire wave field, and the continuation was quite simple. So from now on, what you need is plain and simple continuation. Like I said, your job is not to trade the pullback, but to look for a continuation in the direction of the main idea at this point. You may say the daily closing bullish, but the monthly still looking good for a possible continuation. And yes, you're right. Now, doesn't mean that this monthly cannot stretch a little bit more to the point that can go to the 1930, and that's your job. How can we see that last stretch all the way up to the 30? The weekly candle here is about to close back in that range. So if price is closing inside this range, you may manage to see kind of easier moves to the upside than trying to be, aggressive and planning sells or holding sells there for some kind of drag down and not finding that easy continuation to the downside, because what this weekly candle is telling you since yesterday created that confirmation of support, and we all know the price leaving that confirmation of support high. What makes sense is to have a next key level getting hit at 1910 and then 1920 and so on and so on. That's your job as a trader. Now, for a possible reaction, let's do analysis here for the two options. For the option to the upside, you already know a friendly pullback, even a form of on the 50-minute candle like this candle here, the kind of the last couple candles before the daily close, having a drop to this area here, maybe a next candle closing back in the range ASAP. No, a close below that area, because if it's closing below that area, then what makes sense is we're gonna have a drop, gonna have a pullback, and at the drop of that area there, you may consider for that move to the downside, even to the 1910 can be done. But thinking that this is clean traffic in to the left hand side, and we have kind of the same behavior from the past in that area, then that price can easily give you at any given point can give you something like that. We cannot discount the fact that the monthly is pretty heavy to the downside. So it can happen, it easily can happen. But for that, you need price leaving that area of contention 1913. Other than that, that can be the reaction point, price closing back in the range, a little bit of a retest there, a high, retesting that high over there, and going to this area. The moment you have a 5 or 50-minute candle during heavy volume session, a 5-minute candle body is more than enough. Kind of the closing we got this morning, but I didn't want to pull the trigger because we were trading near to the 1906, and the breakout that we have there was pretty heavy, almost going all the way up to the 1906, and they gave me kind of the chance to jump on that train. And I'm gonna give you the idea again, but something that can go to the 1920 and close above the 1920. All you have to do is wait for a maximum pullback to the 19, or even to this little candle created that previous support on the 50-minute candles there, and price from there establish a brand new support and a third retest there. Most is a high probability trade for at least 50 pips to the 1925, but the one that makes sense is getting hit the 1930 from now on. Now, that's basically the continuation is the one that you need to look for. But if for any reason you see the price close below this area, then plan a pullback can be done there, and then you're gonna need to find a resistance, confirmation of resistance, and the third candle, a sap breaking the second candle low, and that continuation can be there. Other than that, don't plan based on don't plan sales from now on. Just watch how price can react at the 1913 somewhere there, and the bodies of the candles here, they can give you a plain and simple fake out. That's your job, to look for a friendly fake out, something that can go there, close like this, and the very next candle closing inside the range. After the retest is done, technically you don't need another retest. Something like this, closing back in the range. If you have support, confirmation of support, and the high of that candle there is not being respected after the pullback is done, your job is something like this, and don't plan sales from now on. Just be careful, holding sales or planning sales long term, because you're trading a pullback on a daily candle. So be careful with it. For the move from the move the downside move this morning, this candle here, that was the area basically from the London volume, that area there. This candle, you can see how massive that candle it was. So for me, I wanted to see the close above the 1905, but at the same time didn't want to risk too much, especially having that monster candle there, 22 pips, and the timing is not helping at all, because this candle here is the last 5-minute, is the 5-minute candle that gives a 30-minute candle opening. It's basically the 5-minute candle that closed before a brand new 30-minute candle comes in play. And when that 30-minute candle comes in play, like this candle, for example, coming in play, not really, because a 30-minute candle tends to be more aggressive in pullback. But for the ones that manage to get in there, or even earlier, when that reaction from COMEX happened, good job. I'm not gonna, I'm not gonna say it was a bad trade. No, it's just that based on the risk reward was tricky, especially because that candle is kind of covering the whole move that we were expecting end as a fake out. But from there, very next move, this one right here is still very dangerous because price is closing below the resistance. Technically, you need price closing or leaving that candle there, the high of that candle there. That is one that create the fake out to plan a proper trade. If you plan your trade, let's say from this area or even from the downside there, still dangerous because the candle that can give you the idea is the one that closed above the 1905, like this one, for example, there. This 1905, that candle there. That's kind of the candle that can provide you with the setup. And the moment you have something like that, for me, was not an option to plan that buy over there, risking this candle here for something that could easily go to this candle here and reject. There's no, I was not expecting with that massive close there, was not expecting that clean move. And when that candle started just breaking inside, it was already too late. And if I tried to follow that thing, for something that can go to the high of that candle there, it's pure FOMO. The risk reward was not there for me to consider it. But later on, if you go back to the Vimeo recording, you will know how easy it was for me to plan my buy. Even though when I pulled the trigger, I'm pretty sure the price was somewhere there. My order was activated a little bit higher than that, but it was okay because at that point I had enough information, enough confirmations there that we're gonna see that plain and simple continuation to the upside. So that's gonna be pretty much for now. I'll see you guys tomorrow for another new streaming. Please take care, stay safe, and look for a possible reaction 1913 and a continuation to the upside. Bye.